Welcome back to We Are Cosmic. If you are serious about crypto, serious about understanding market cycles, and serious about positioning yourself before the crowd, you are exactly where you need to be. This upcoming week is not just another week in crypto. It could decide the short-term direction of the entire market, and especially for XRP holders, this could be a defining moment. Right now, the biggest question everyone is asking is simple. Has XRP already hit the bottom, or are we about to see another leg down before a major breakout? The market is extremely volatile. Fear is high. Uncertainty is everywhere. And when uncertainty dominates, that is when opportunity quietly builds in the background. Let's start with price structure and sentiment. XRP rallied massively after the 2024 confirmation that Donald Trump would return to office. That rally pushed XRP far above the long-standing 40 to 50 cent consolidation zone where it had been stuck for years. Even now, despite recent pullbacks, XRP is still significantly higher than those previous lows. However, the broader crypto market has erased much of the Trump rally gains. That tells us something important. Macro forces are currently stronger than individual crypto narratives. The biggest macro pressure right now is geopolitical tension in the Middle East. Reports suggest potential U.S. military action involving Iran, with assets like the USS Gerald Ford positioned strategically. Whether a strike happens or not, markets do not like uncertainty. If a strike does occur, risk assets like crypto could see a sharp temporary drop. Historically, geopolitical shocks create fast liquidity drains before markets stabilize. Now here's where things get interesting. The market may have already priced in some of this uncertainty. That means if we do see a drop, it could be short-lived. In volatile markets, sharp pullbacks often become aggressive accumulation zones for smart money. At the same time, something very bullish is happening underneath the surface. According to CoinDesk, daily successful transactions on the XRP ledger are up 40%, approaching 2.5 million per day. That is not speculation. That is real network usage growth. When usage rises while price stagnates, it often signals accumulation rather than collapse. On-chain analytics platform Sentiment also reported XRP just experienced its largest realized loss spike since 2022. Historically, when similar levels of capitulation happened 39 months ago, XRP went on to rally 114% over the following 8 months. Large realized losses usually mean weak hands are exiting positions. Strong hands typically accumulate during those periods. So we have two forces colliding: short-term geopolitical fear that could cause volatility, long-term structural growth in XRP's network usage and adoption. This is the exact environment where markets test conviction. Most retail investors focus only on price. Professionals look at usage, liquidity positioning, regulatory momentum, and institutional activity. And this week is critical because regulatory clarity discussions are heating up in Washington. If we see progress on crypto legislation, especially around market structure and clarity frameworks, that could shift sentiment dramatically. Markets hate uncertainty. Remove uncertainty, and capital flows quickly. So here's the big picture. Could we see a pullback if geopolitical tensions escalate? Yes, very possible. Could that be the final shakeout before a major breakout? Also very possible. The key is understanding that volatility does not equal weakness. Volatility is often the setup before expansion. And if you are positioned correctly, volatility becomes opportunity. Now let's slow this down and move away from emotions. Forget headlines, forget Twitter narratives. Let's focus on data. Because while price looks stagnant, the XRP ledger is quietly showing strength. Recently, CoinDesk reported that daily successful transactions on the XRP ledger have jumped 40%, approaching 2.5 million transactions per day. That is not hype. That is measurable activity on-chain. When transaction counts rise at that scale, it means real usage is increasing. This is important because in crypto, long-term value does not come from speculation alone. It comes from network utility. If a blockchain is being used more, it means more liquidity movement, more settlement activity, and more real-world integration. Now here's the interesting part. Price has not reacted strongly to this growth yet. When network usage rises while price stays flat or pulls back, it often signals accumulation. Historically, in crypto cycles, network growth leads price, not the other way around. Retail investors usually wait for price confirmation. Smart money watches usage metrics first. At the same time, on-chain intelligence platform Sentiment reported that XRP just experienced its largest realized loss spike since 2022. Realized losses happen when holders sell at a loss, locking in downside. This is what we call capitulation. Now let's analyze this properly. When weak hands panic sell during fear, They transfer supply to stronger hands who are willing to hold through volatility. That redistribution process is painful in the short term, but constructive in the long term. The last time XRP saw a similar realized loss spike, around 39 months ago, the asset went on to rally approximately 114% over the next 8 months. Does that guarantee the same outcome now? No, but it gives us historical context. Large realized loss spikes typically happen near local bottoms, not tops. Why? Because most investors sell after extended drawdowns, not after rallies. By the time everyone feels maximum frustration, most of the downside pressure is already absorbed. Now combine these two factors, rising transaction count, major capitulation event. That combination is very powerful. It suggests that while short-term traders are exiting, the underlying network is growing stronger. This is what underperformance looks like before outperformance. Let's zoom out further. XRP massively rallied after the 2024 election confirmation that Donald Trump would return to office. That rally was driven by expectations of regulatory change and improved sentiment toward crypto markets. However, much of that macro-driven excitement has faded as geopolitical risks and broader market corrections weighed on sentiment. The overall crypto market has retraced significantly. XRP is not alone in this, but here is the key difference. XRP has real institutional infrastructure being built around it. While many altcoins depend purely on speculative cycles, XRP's growth is increasingly tied to enterprise adoption and regulatory progress. That changes how you evaluate pullbacks. In speculative tokens, pullbacks often signal fading hype. In infrastructure-based assets, pullbacks during network growth often signal accumulation phases. Another factor to consider is liquidity rotation. In volatile macro environments, capital temporarily moves out of risk assets. But when uncertainty clears, capital returns quickly and usually flows into assets with strong fundamentals first. The biggest mistake retail investors make is confusing short-term volatility with long-term failure. Markets move in cycles. There are accumulation phases, expansion phases, distribution phases, and correction phases. Right now, XRP appears to be in a high volatility accumulation zone, but we cannot ignore macro risk. If geopolitical tensions escalate, we could see another leg down. However, if that drop happens while network activity continues rising, it strengthens the long-term case rather than weakens it. Now that we've covered on-chain data, let's talk about the elephant in the room: geopolitical risk. This is not something to fear blindly. It's something to understand, quantify, and plan around. Right now, the biggest headline pressure on crypto markets is coming from the Middle East. Reports suggest potential U.S. military action in the region, with assets like the USS Gerald Ford moving into position. Questions are flying. Will a strike happen? When will it happen? And how will markets react? Markets inherently dislike uncertainty. Even the possibility of a strike is enough to create short-term fear, pushing risk assets like cryptocurrencies lower. Historically, sudden geopolitical events cause rapid liquidity withdrawals, often followed by quick rebounds once clarity arrives. In other words, temporary shocks can become short-term selling opportunities for traders who panic, while experienced investors often use them to position themselves for long-term gains. Here's how we should think about it from a professional crypto analyst perspective. Volatility is not the enemy, it is a signal. When price drops due to external shocks, but network usage, adoption, or institutional infrastructure continues to grow, it often signals strength rather than weakness. That's exactly the situation we're observing with XRP right now. Transaction volume on the XRP ledger has risen 40%, and on-chain analytics show large realized losses, which historically indicate capitulation and subsequent accumulation by strong hands. Let's talk probabilities. A U.S. strike could happen, and if it does, short-term price pullbacks are almost certain, but the impact is often temporary because macroeconomic and on-chain fundamentals remain intact. Smart investors watch for these pullbacks as potential entry points. Timing the exact bottom is impossible, but understanding the context of a temporary shock helps position for long-term upside. Now, combine this geopolitical uncertainty with regulatory momentum. The Clarity Act is expected to see critical discussions this week. The White House has been actively engaging crypto and banking leaders, pushing for progress before the end of the month. Markets hate uncertainty, and clarity from regulators can act as a catalyst for rapid recovery. If progress is made on this front, the pullback caused by geopolitical risk could be the final shakeout before a significant breakout in XRP and the broader market. Another important factor is investor psychology. Retail traders often react emotionally to fear-inducing news. They sell first and ask questions later. Institutional investors, on the other hand, evaluate risk and opportunity simultaneously. They observe that XRP is experiencing a major redistribution of supply. Weak hands are exiting while strong hands are accumulating. This alignment of events is classic preparation for the next upward move. We also need to consider historical analogies. In prior cycles, geopolitical or macro shocks temporarily depressed crypto prices, but assets with strong fundamentals rebounded sharply. XRP's fundamentals are particularly robust due to Ripple's ongoing institutional strategy, including acquisitions and expanding banking infrastructure. These developments are independent of short-term market noise, meaning that even if the market reacts negatively to a strike, the long-term trajectory remains positive. Finally, it's crucial to separate short-term risk from long-term opportunity. Temporary volatility creates windows of opportunity for accumulation and positioning. For XRP, the combination of rising network activity, institutional adoption, and regulatory clarity positions it to potentially outperform once short-term noise subsides. Now let's zoom out and look at the bigger picture. XRP isn't just a speculative token, its strength comes from the company behind it, Ripple Labs, and their aggressive institutional strategy. This is where many retail investors miss the story. They see price swings and panic, but they don't see the structural foundation being built. Ripple has been quietly acquiring billions of dollars worth of companies. According to recent reports, they've invested around $4 billion in acquisitions to expand their banking and financial infrastructure. These aren't random investments. They are building a network that allows Ripple to integrate deeply into traditional finance systems. Think of it like building the highways that will carry XRP to mass adoption. Every acquisition strengthens their position as a dominant player in cross-border payments and financial services. Then there's the OCC charter. Obtaining this charter allows Ripple to operate more like a regulated bank. That is huge. Why? Because it provides legal clarity, institutional trust, and regulatory compliance, three pillars that attract big banking clients and enterprises. When banks can trust a platform to be regulated, they are far more likely to adopt it for large-scale transactions. This puts XRP in a position that most cryptocurrencies can only dream of. Real adoption by financial institutions, not just retail speculation. Let's also talk about ETFs. Ripple has significant developments coming with a February 26 ETF deadline. Exchange-traded funds are one of the most direct ways to bring institutional and retail money into an asset. Approval or progress on these ETFs could unlock massive new liquidity flows for XRP. Historically, ETF approvals in crypto markets have acted as major catalysts for price acceleration. Now combine these elements: rising network usage, realized loss spikes indicating accumulation, geopolitical volatility creating short-term price shocks, and Ripple's institutional positioning. You get a clear framework. Short-term volatility is the price you pay for long-term structural growth. Strong hands accumulate during uncertainty, and when clarity emerges, the market often moves sharply in favor of fundamentals. Here's why this matters for you as an XRP holder or potential investor. Most altcoins live and die on hype cycles. XRP is different. Its story is grounded in institutional adoption, real network utility, and regulatory progress. That means while the broader market reacts emotionally to fear and uncertainty, XRP's structural growth continues quietly underneath. Even if geopolitical events trigger a pullback, these moves by Ripple Labs are essentially irreversible. They've invested billions in acquisitions, institutional relationships, and infrastructure that is unlikely to be reversed. Every partnership, every charter approval, every step toward regulatory clarity strengthens the long-term case. This creates an asymmetric risk-reward setup. Short-term price dips are potential buying opportunities, while long-term upside could be substantial. It's also worth noting that smart investors are watching this closely. Institutional players don't move money based purely on sentiment or social media hype. They analyze usage metrics, regulatory progress, and corporate strategy. The signals coming from Ripple's moves are loud and clear. They're building for the next decade, not the next quarter. Finally, this is where patience becomes an advantage. The short-term market may shake out weak hands. Retail traders may panic during volatile news. But those who understand the fundamentals, network growth, institutional adoption, and regulatory clarity can position themselves for what may be the next major phase of XRP adoption and price appreciation. Now that we've discussed Ripple's institutional strategy, Let's turn our attention to another critical factor that could define XRP's near-term trajectory: regulatory clarity. In crypto, uncertainty is the #1 killer of market confidence. Investors hate not knowing how governments will treat digital assets, and markets tend to stall or pull back until that fog clears. That's where the Clarity Act comes in. The Clarity Act is expected to bring concrete rules around how cryptocurrencies like XRP can operate within the U.S. financial system. The White House has been actively engaging both crypto leaders and major banking players to advance this legislation, aiming for progress before the end of the month. That deadline is critical because the sooner these frameworks are clarified, the faster capital can move confidently into compliant crypto assets like XRP. Why does this matter so much for XRP? Simple. It's already positioned to win. Ripple has been building real-world infrastructure, acquiring businesses, and securing an OCC charter to operate like a regulated bank. These moves make XRP an ideal candidate for adoption once clear regulatory guidance is in place. If the Clarity Act passes or sees positive momentum, it could act as a massive catalyst for institutional inflows. In other words, clarity doesn't just reduce risk, it actively creates opportunity. Let's break down the potential impact. Markets have a psychological component. Fear of uncertainty keeps retail and institutional investors sidelined. Once the path forward is clear, capital flows quickly. For XRP, this means that a positive regulatory outcome could accelerate adoption by banks, payment processors, and even ETFs, reinforcing the narrative that XRP isn't just another speculative token, it's becoming a foundational financial asset. Even short-term volatility could be interpreted differently in this context. A geopolitical pullback or temporary market dip becomes a buying opportunity rather than a sign of failure. That's because the underlying fundamentals, Ripple's banking infrastructure, network usage growth, and regulatory progress are still intact. In fact, temporary volatility can compress risk-adjusted entry points, allowing strategic investors to accumulate before a potential breakout. Now, some people may ask, what about delays or setbacks in the legislative process? This is a fair question. Political processes are rarely linear. However, the momentum behind the Clarity Act is significant. Both crypto leaders and major banking institutions are under pressure to deliver results. Even if progress is incremental, it signals commitment from regulators and establishes a framework for legal certainty. That alone can be enough to stabilize markets and encourage adoption. It's also worth noting the compounding effect with Ripple's other initiatives. Network growth, institutional acquisitions, and OCC charter approval create a strong baseline of fundamentals. Regulatory clarity acts as a catalyst on top of that foundation. When multiple factors align, strong usage metrics, institutional support, and clear legal frameworks, markets often respond disproportionately, leading to rapid price appreciation once the uncertainty resolves. From an investor's perspective, the key takeaway is this: short-term volatility is inevitable, but long-term structural trends favor XRP. The combination of Ripple's real-world adoption, regulatory momentum via the Clarity Act, and ongoing network growth creates a unique asymmetry in risk versus reward. Temporary pullbacks may be unavoidable, but they present accumulation opportunities rather than threats. Now that we've gone through network growth, on-chain data, institutional strategy, geopolitical risk, and regulatory clarity, it's time to put it all together. If you're an XRP holder or someone considering entering the market, understanding the interplay of these factors is critical. This is where strategy meets opportunity. Let's start with the immediate market environment. Short-term volatility is likely to continue, especially if geopolitical tensions in the Middle East escalate. A temporary pullback could happen, and that's not necessarily bad. Historically, these short-term drops are exactly when smart investors accumulate. Weak hands exit, strong hands enter, and the market is prepared for a bigger move once uncertainty resolves. For XRP, we are in what could be called a high volatility accumulation zone. Next, consider Ripple's institutional strategy. $4 billion in acquisitions, the OCC charter, and the upcoming ETF possibilities all point to a structurally stronger XRP ecosystem. These developments are not dependent on daily market swings. They are long-term game changers. The more infrastructure Ripple builds and regulatory clarity they gain, the more confidence institutions will have in using XRP for large-scale operations. This gives the asset real-world utility that is rare among cryptocurrencies. Then there's network usage and on-chain metrics. XRP's transaction volume is growing rapidly even while price remains relatively flat. This tells us the asset is being used and adopted, not just traded. Rising daily transactions indicate genuine liquidity and adoption, the type of activity that often precedes major price expansions. On-chain realized loss spikes further show that weak hands are being shaken out, leaving the asset in the hands of long-term believers. Historically, these conditions have set the stage for significant rallies. Regulatory clarity via the Clarity Act is the final piece of the puzzle. Markets hate uncertainty, and clarity is the catalyst that can trigger capital inflows. Once the legislative framework is more certain, we can expect increased participation from banks, payment processors, and institutional investors. This is exactly what XRP has been preparing for with its acquisitions, banking partnerships, and infrastructure expansion. The combination of adoption, institutional trust, and clear regulations creates a strong asymmetry. The upside potential is much higher than the downside risk. So, what does this mean for strategy? First, don't panic during short-term pullbacks. These are part of the accumulation process. Second, monitor on-chain metrics and institutional developments closely. Rising transactions, active partnerships, and regulatory milestones are stronger indicators than daily price movements. Third, understand that volatility is opportunity. Temporary dips allow for strategic entry points for those who are focused on the long-term story. Finally, remember the broader perspective. Ripple and XRP are positioned to be a dominant player in digital finance. The combination of infrastructure growth, legal clarity, and adoption is setting the stage for a potential breakout unlike most other assets in the market. This is not just hype, it's a calculated structural play. In conclusion, this upcoming week could set the tone for the next phase of XRP's journey. Whether there's a short-term pullback from geopolitical tension or a bullish spike from regulatory clarity, being informed and prepared will allow you to position yourself advantageously. For those who understand the fundamentals, this is more than just a market. It's a once-in-a-cycle opportunity to build a strategic position in a digital asset that is actively being integrated into the real-world financial system. At We Are Cosmic, our goal is to keep you informed, focused, and prepared to act with clarity, not emotion. Remember, XRP's story is bigger than short-term noise. Patience, data, and strategic positioning will be the keys to capturing the opportunity ahead. The digital revolution is happening, and Ripple and XRP are leading the charge. Stay sharp, stay informed, and stay cosmic.